Larry Shover, Chief Investment Officer at SFG Alternatives in Chicago. Hello to you, Larry, and many big thanks for joining us today. Let's take a look first at some of those oil moves that we have seen. We've seen surges in, for us, the overnight session. Walk us through what you're seeing on the ground over there.
Well, pretty much the same thing that we've seen all year is that the oil market continues to overreact to news, underreact to fundamentals. And let's keep in mind that last week's report that came out about a week ago was fairly bearish fundamentally, both for product and for crude. And since that time, the election has taken place. It's been a distraction, and now people are focusing on the end of November, which is a big deal. And it seems now the consensus seems to believe that there will be some type of fundamental restrictions or cuts or freezes put in place that's made the market bounce back a little bit, or actually a lot, 4.5%. That's a lot. But you know, the move, you have to look at the fact that this is where crude has been for a very long time. So it's kind of just reacting to a lot of news and just looking the other way from the elections.
Well, Larry, on that idea of deal or no deal, I just wanted to show viewers a chart that we've got here. And I'll walk you through it because I appreciate that you can't see it. Oil has, in fact, erased all gains since OPEC agreed to cut output in Algiers. Now, just to, again, walk viewers through what we're seeing there, that little arrow that you're seeing in the uptick and that upward move is when the Algiers deal was cut. And you can see that subsequently, in fact, losing all ground made there. I'm not sure if you have this show deal or no deal in the US, Larry, but the fact that it's OPEC coming through really suggests there's not a huge amount of market confidence within the body, but there's some suggestions regarding that funding could in fact force them to make a deal. Where are you sitting, and really what is the crux of the heart of this one?
Yeah, you know, you just brought up a lot of moving pieces that's going on in the market, just hit the nail on the head. And, you know, whether a consensus deal is cut or whether it's not, the market has gotten conditioned to the fact that OPEC has taken a playbook or a script out of the playbook from Draghi, and that is to put up good headlines, make news of the fact that they're going to take control of this market, that we're going to get it back into balance, whatever it takes. And we all know underneath the surface that there's so many moving pieces and there's so many different players involved. And clearly OPEC does have a heavy hand and can have a heavy hand in it. But all that to say, the fact that the news that they put out, the premonition that they're going to do something seems to be good enough to calm the market down and get it back to where it should be in the mid-40s, at least in U.S. terms. Many of us, including me, have fallen short in that I thought our market would be balanced by the fourth quarter of this year. But if it can become balanced by maybe the first quarter of next year, that's not too far away. And so I think just stabilizing the market and the way OPEC has done that has been a good and great thing for the market.
Well, Larry, I know that you've also been keeping an eye on copper. And again, that's been sort of in terms of that metals madness that we've seen come through in post-election markets. We've seen copper really poised now to be top performer this month. Again, we've got a graph to show viewers, and I'll walk you through it. But copper really surging as the top performer this month, and that's followed closely by nickel, zinc, and live cattle. And coming up at the bottom really is the laggard of this performance is wheat. Now, when we started getting into the laggards, the majority are really the soft commodities. Does that suggest the divergence that we're seeing and just the strength of that metals madness that's been coming through post that Trump victory?
Yeah, it's a good point. And when you think of copper in particular with some of the other industrial metals, I mean, a lot of that rally was put in place before the election, as it seems like many of these markets, the zinc market, the iron market, were so deeply oversold. And just to see a little bit of green shoots in the industrial production complex around the world has really helped a short squeeze take place. And whether the rally that we've seen will continue, it's really hard to say. I mean, it was a really, really good snapback rally. It caught a lot of people's attention after the rally took place, that is. There still are some overwhelming overwhelming deficits in the market, but can we get the production that we need to keep the rally with a head of steam? And that's the big outlier. When you look at some of the bigger markets, especially the iron ore market, it doesn't seem like people are very confident that we'll continue to see the rally that we've seen in the past.
We will have to leave it there. Larry Shover, many thanks for the time this morning. Much appreciate it.